Right then, now that Mr. Bernanke is putting the balance sheet of the Federal Reserve on a diet, what ripple effects will the slowdown in the flow of cheap credit have on frontier and emerging economies? Let's find out from someone who's traded on both sides of the fence. Aly-Khan Satchu is the Chief Executive of Nairobi-based Rich Management, is live in studio with us tonight. Mr. Satchu, let's start with your broad impressions of the statement from the Federal Open Markets Committee meeting.
I think, it was widely expected that there would be a taper. I, for one, did not expect it at Christmas because these are pretty thin markets. But Rama, it's a teensy-weensy, tiny little taper. And I think that's why you didn't see much of a reaction in the markets over the last 24 hours. I think the bleeding edge of this taper is going to be gold, which I think is headed to $1,000 at some point next year. Maybe the South African rand gets buttressed because it's typically quite exposed to the crosswinds of the international markets. But I, for one, don't think that sub-Saharan Africa is going to be roiled by this move. And I think the Fed's going to move very, very gingerly as it takes the foot very, very carefully off the accelerator and keeps promising to push it back down again if anything falls back.
Indeed. So would it then be fair to argue that since QE is still essentially at roughly the same levels and rates, of course, haven't been cut, yields for Eurobonds issued next year by sub-Saharan countries will roughly be at the same level as what we've seen in the past from issuers like Rwanda, for example?
So the key thing when you're looking at sovereign Eurobonds in Africa is to look at the US 10-year bond, because that is the reference price for every African credit. Rwanda exhibited outstanding timing in the global markets. They sold their bond when I think the 10-year bond was at a record low of about 1.795%. It was an outstanding piece of work for a neophyte in the capital markets. Obviously, the 10-year yield has moved much further out since then. So I don't expect Kenya to be able to issue at the all-in rate that Rwanda issued at, but I think it's not going to be too far away.
Indeed. Speaking of Kenya, however, $1.5 billion coming to the markets in the next couple of weeks, but most of the issues that we've seen have come from commodity producers before, Rwanda, of course, being the exception. How do you expect Kenya's issue to be priced?
Well, I think Kenya is a fundamentally different credit to the oil plays from whom we've seen, or oil and copper plays from whom we've seen a lot of Eurobond issues. I think there'll be a lot of demand for the Kenyan sovereign credit. Most sub-Saharan African credits have found themselves many times oversubscribed when they've issued bonds. I don't see much difference happening here. It's only if Kenya goes for a big ask, like $2 billion, that we might see more concession in the price and less of an oversubscription. But I think it'll be a solid issue, and I think there'll be good appetite for it.
Indeed, but at the end of the day, really, Mr. Satchu, the fact is the party cannot simply last forever. We can't keep pumping money into the economy left, right and centre. What signals would indicate that the party is just about to come to an end, aside from the taper?
Well, I think we'd get some very dramatic moves in the markets. We saw some of those moves earlier in the year as the market began to anticipate the end of the taper. We saw the rupee collapse to an all-time low. The rand blew up and went to about 10.55. All that volatility, in a way, I think that's why we got a more subdued reaction, because the market's priced it in. It's going to be a very slow fuse. The Fed's not going to do anything dramatic. I think, basically the party continues, maybe just with a few less vodkas, but it continues through 2014. I think the Fed is going to continue to blow bubbles at this point in time until the economy really gets up and smacks them on the head and says, we've rebounded very hard, you're behind the curve.
Indeed, of course, and at the same time, the US dollar continues taking a hit. Let's look at the NSE 20 share index in the Kenyan capital, Nairobi. It's lost about 300 points in the last 3 or so weeks. To what extent is that influenced by the developments over in Washington?
So we've had a phenomenal bull market in Nairobi and across sub-Saharan Africa. Nairobi is going to be in the top 10 out of 104 indices at the end of this year for the second year running. Nigeria pretty much the same. Even Egypt is now at 24th January 2011 highs. And you remember what happened in January 2011. Strong rebound. I think, Nairobi had its own little swoon, quite dramatic, 10%, but remains in a bull trend. I believe a ton of cash comes into the markets early first quarter into frontier indices, and we see the rally resume through quarter one.
Indeed. We'll have to leave it there for the time being, though. Thank you very much for your insights tonight. That's Aly-Khan Satchu, Chief Executive Officer of Rich Management here in the Kenyan capital, Nairobi.